I'm here now with David Morgan, and he gave a speech on the topic Silver the next 10 years. May I ask you what your overall expectations are for silver in the next 10 years?
My overall expectation is that silver will perform better in the next decade than it has in the previous decade. So it went from roughly $5 or a bit under that to probably 21 at the peak in '08. So we use that. So we get up about fourfold or so 400% increase. So taking 400% from, say, the $20 level, that'd be like $80 over the next decade. I expect it to do at least better than that by probably double. So probably rather than 80 to 160, although my number's 100, but I definitely believe that silver will outperform what it's done in the previous 10 years by a goodly margin.
Yeah, related to the price, we have to talk about the supply and demand situation. What is there to be said?
The supply-demand situation has been very interesting over the last couple of decades, really. Silver's in a deficit for 16 consecutive years. So there was more demand than supply by either mining and recycling. And that stopped in about 2007. So all silver supply from mining and recycling was greater than total demand. And I think that's going to continue probably for the next 2 to 3 years. And after that, we're going to go back into a deficit, where even with more mining and more recycling, perhaps, you're going to see more demand, both industrially and investment-wise, that will take us into a deficit. So in other words, you're going to be in a situation where we were for 16 years, where you're going to have more demand on the market than you're going to be able to supply from the market. And the only way for those to match is for a higher silver price. And I believe that's almost inevitable.
Yeah, and given the industrial use of silver, you think silver could outperform gold?
Yeah, from the beginning of my writing and speaking and all that I've done in the silver market, I've always maintained that silver would outperform gold. Now, it depends where you start the start line. If you start in 2000 to the time we're doing this interview, gold is up roughly 400% and silver's up about 500%. So from that starting mark, it's already outperformed gold. I use the ratio to keep track of it. The ratio started from my starting line when silver bottomed about September 2003. And the ratio at that time was 80 to 1. 80 ounces of silver, about 1 ounce of gold. Today, as we're doing the interview, it's 52. So versus gold, silver has actually outperformed gold already, and I expect that to continue.
Mm-hmm. One factor for the price is, of course, the silver futures market and the short positions that JP Morgan Chase and HSBC have in this segment of the market. And there is now a lawsuit underway. What is your opinion on that?
Well, the lawsuit, there's actually 3, I think, are beneficial to put more light on the silver market and how it really operates. Whether or not there'll be any substantive quantitative measurement that we'll be able to see as a result of these lawsuits, I'd prefer not to comment on, but I will. I'm of the mindset that it's very difficult to prove manipulation. You have to really prove intent, and that means why somebody did something. And even knowing that they did it for a profit motive is not illegal. It's just something that the judge would say, well, what's wrong with trying to make money? What's wrong with the free market? You can go long or go short. So it's very difficult, I think, to prove it. But again, it puts a lot of light on it. And there are ways that the market has been moved around again and again and again throughout the last decade. That type of trading activity has not taken place in the last 2 months. Interestingly, at the same time in the last 2 months, silver's gone roughly from $19 to almost 27. Isn't that interesting? So the open interest continues to increase, meaning that neither the longs or the shorts are giving up. Until the open interest decreases is the only time we really know the winners and the losers. Normally what happens is that the banks are able to gather enough silver on paper to to sell a huge quantity into the market and drive the price down. And once the price is driven down, they're able to cover their short positions and then start the game all over again. It's my belief, but I can't prove, that right now they're being watched closely for their trading activity. Well, unless they're going to really sell a lot on paper, the price will continue to go under normal market forces, meaning it's going to level off or continue up. So that is something that may be keeping the market, going up. Plus, I think the hedge funds are taking advantage of that, with this knowing that it's going to be hard for them to cover these positions now because there may be some eyes on them. People love an easy trade, so they're piling on the long side of silver. I think the only thing that would really take the silver price down, there's several things that could. One is that they sell it on paper and there's no consequences, or they're willing to risk the consequences of doing so. The other one would be to mobilize a great deal of silver that's physical, and that would really probably hurt the market for a while. That would be where you could probably take some silver off of the SLV, get some of the market makers to get their physical silver and dump that on the market all at once. That would take a lot of coordinating activity, but it could happen. I doubt it, but it could. So that's also a possibility. But as it stands right now, I think things are still very favorable for the silver market for the next several weeks.
Thank you very much.